What is going on, guys? Luke here today, and I just made a massive bet on a stock, but I also noticed a very disturbing trend with its biggest rival. Now I have no idea why this penny stock started to move on the Robinhood 100. Actually, I don't know how it's on the list at all. But for those of you who want a much more solid bet, I will give you that penny stock's rival who may provide a similar return with a lot less risk. So you're actually getting two stocks in one video. And I got the fingers right, you see that? All I ask for in return is you just gently tap that like button and subscribe if you haven't already. So this penny stock and its rival has just been decimated by the pandemic. And while most of the recovery players have been trending up, or some of them have actually fully recovered in some cases, these stocks and the industry as a whole has continued to kind of trend down or tread water. And there's actually some controversy within the industry, and the news cycle within that is in full-on negative mode, pushing these stocks to their lowest levels since the pandemic started. So to me, this sounds like the perfect time to invest with the right approach, risk mitigations, and time horizon. But let's get the crappy penny stock out of the way real quick so you guys know why I avoided it. So the penny stock that has been trending on Robinhood is AMC Theaters, or ticker symbol AMC. There are actually many reasons why you should stay away, but here are just a few. AMC is out of cash. AMC's lenders are asking them to file bankruptcy. AMC's rent deferral from their landlords expires in less than a week. They also just diluted their shares to raise money, which only gets them through January. They still need $750 million in capital raises to get through the next year by their estimation. And we know that is probably the best case scenario. So why people are betting on this penny stock out of all the penny stocks you could bet on is just beyond me at this point. But hey, even Hertz had a huge run up after bankruptcy, so this may be a bargain to some, pending their bankruptcy. And if you couldn't tell by the style of my videos, I clearly love movies. I really think that no matter how you slice it, movie theaters are not going away overall. Just like the airlines, just like restaurants, and just like the cruise ships. Will it look different? Absolutely. Will some fall by the wayside? Yeah, I agree, some of them are going to go away. But all of them disappearing altogether? No, I don't think so. So why am I bullish on the sector? Actually, for a handful of reasons. The first would be the vaccine rollout. There is light at the end of this tunnel now, and every industry rocked by this, from airlines to cruise ships to retail, just needed to survive until the vaccine happened. And I won't lie, I would not have made this bet if the vaccines were not already being rolled out. Release dates for many big budget movies are being moved to October, meaning that the industry expects theaters to be close to full capacity by then. In the meantime, as theaters are allowed to open, they will release smaller films and maybe even some older films to generate revenue in the meantime. And this has already forced some out-of-the-box thinking from studios, as they need these theaters to succeed to keep them afloat. If everyone can just make it until October or so, they will probably avoid disaster. It is still 50-50, and maybe actually more than that, on if AMC goes bankrupt or not. Hence why you should never invest money you cannot afford to lose in penny stocks. That is also the reason why I put my money with their rival in the theater industry, as I feel the woes of AMC have actually weighed down the whole industry, since they are the largest of the group. When the big dog's struggling, it sometimes can drag everybody else down. AMC's rival is stuck in the same dynamic as the rest of the industry, but there are actually three key differences that make them very attractive compared to everyone else. First, they have plenty of cash to make it through 2021 and beyond. 2021 cash burn is expected to be at $65 million per month against an $825 million cash balance. And second, their debt levels are not at max levels like AMC and some of their other rivals, and they have not taken on any new debt or diluted any of their shares to help with this pandemic. If they needed to issue more debt or do something else, they could, and probably at very favorable terms given their financial situation. And third, they are the number 2 theater behind AMC, but are in a much better spot to capitalize on opportunities like poaching locations from the number 1 player. Although both had denied it, there was talk of this stock taking over AMC locations in select markets only, essentially cherry-picking the best of the best. And to be honest, they kind of have AMC over the barrel a bit and can offer cash for prime locations to help AMC with their liquidity crisis. If AMC doesn't want to play, then they can just wait for the bankruptcy to happen and then pick up those assets there. Either way, if AMC doesn't make it, or even if they do, this company stands to get some of the best that AMC has to offer and at a price that in 2 years will be a complete steal. So the stock I bought instead of AMC is Cinemark, or ticker symbol CNK, and I paid just over $15 per share. Like so many recovery plays, I think this stock will swing back hard, especially since I believe it is likely to emerge from the pandemic as not only the biggest theater chain in the world, but I believe they will get to cherry pick some of the best locations from their rival, making them even stronger. I know streaming is the trend right now, but it is not nearly as profitable as putting the movie in the theater, so the time will come when studios will be scrambling to maximize profitability as we come to the end of this pandemic. And you cannot do that by releasing movies on streaming services. They tried it, and it kind of mostly failed for the most part. Definitely did not replace the revenue from the movies going into the theaters. So my price predictions for Cinemark will be that it will hit $28 on the low mark and be up over $40 in the most bullish scenario next year, making my shares at $15 per share an extremely profitable trade.